Good morning, everyone. How's it going? Today is Friday, December 8th. We're about half an hour before the market opens. I apologize for missing yesterday's aftermarket session. We had an accident nearby that took out our utilities, and now they are back on, obviously, we're recording. So that's great news. Yesterday, and we'll go over what happened in the market a little bit yesterday before we go into the pre-market stuff. And then what we really want to focus on, though, is this employment report that we got this morning. So we'll take a look at how that is affecting the markets this morning. So let's go ahead and share screen. If you hear a lot of rattling around, that's my cleaning crew. They're still here. So let's see what happened yesterday. SPY. We can see that we're still chopping sideways. We did have an up day, but again, we're really just nothing too exciting over here. We're just following that EMA up. That EMA 8 is moving slightly higher, but really it's just flat, and we're just following that EMA 8. In NASDAQ, or the QQQ, that's where we were seeing more action. We did come down this doji bar that touched that EMA 20, which I was suspecting would be the bounce. We got confirmation the next day, and even though we got a red bar the day after that, we moved higher yesterday. So this is basically very much a bounce. We just don't know how far that bounce is going to go because we didn't get a deep pullback. There's only so much energy for this to move. So it's sort of like dropping a bouncing ball. If I drop it from a height, if I moved a lot, then it should bounce a lot. If I just drop it from a couple inches above the ground, it should only bounce a little bit. So here we're just really looking to see it move up to this blue line or this sea green line right here. So nothing too exciting. And if we get a deeper pullback, then we'll get a move to go higher. The other alternative is this could just look like a larger range chop. And if that larger range chop goes for a while, then that could be a buildup of energy as well before we break out. But right now, I'm looking at the scenario where we would just kind of bounce and hit this blue line or that sea green line before pulling back and then making space to move higher. For this morning, we were looking at that economic report, that employment situation. So let's take a look. Okay, so looks like our payrolls are up a little bit higher than consensus. And in manufacturing, we're down. The tightening labor market in manufacturing, non-farm is up. So about even, nothing too exciting in this particular employment situation report. Let's take a look at how the market reacted. And we can see right here, this is the 530 spike when that employment situation was released. Initially, it came down pretty rapidly, and then we very quickly recovered after that. Not as quickly as the downward motion, but that tends to be the case, right? So we move down usually 3 times faster than we move upwards, and that's certainly the case right here, maybe 2.5 times faster in this particular case. But you can see that by now we've kind of evened out and we're just flat to where we were before that employment report was released. Over here in bonds did not recover after that initial movement downwards. So we move downwards and then we are slightly higher, but not significantly higher at all versus that downward movement. So bonds were a little bit stickier on that move downwards. Let's take a look at what TLT is doing in a bigger picture. And yesterday we stalled out. So I was commenting on how we moved parabolically, and if we kept on moving higher, I wouldn't expect it to go beyond the MA200. Well, yesterday we stalled out. We went down 0.57%, even though we got a very similar range bar, and we did stay above that MA150. With this employment situation, you can see this pre-market orange line right here. I don't know if you can see it, it's pretty thin, but right here, this level, you can see we're starting to head back towards that MA, or at least on the open, we're heading towards that EMA 8, pretty close to that EMA 8 line right here. So this is peaking pretty much at the MA 150 line rather than the MA 200 line. Looks like it's going to stall out over here and start pulling back. So reason starting to come back into the bonds. What that means though is that rates will go higher if this pulls back. Interest rates or yields, not interest rates, sorry, bond yields will be higher. And bond yields are higher, that's competition against growth stocks, against interest rate sensitive stocks, against growth. I already said growth, tech stocks in particular. So that would be the NASDAQ stocks. So that's going to put a cap on, or at least put downward pressure on how far the QQQ can go. And that's been our stronger one so far. That's been the one that's been bouncing. So it really does look like a little bit more likely that we are going to maybe only reach this blue bar or blue line right here, or maybe not even. We'll see just how much downward pressure that puts on the market today. But everything that I'm seeing right now makes me less enthusiastic about the positive lean on any portfolio that we might have. And we are at the weekend. So we want to start thinking about hedging, start taking profits on positions that have profits, or to just take some risk off the table. So if anything that we've been holding for a while that hasn't quite reached our targets, we might want to do a little time stop today and take that risk off the table. We're still positively leaning on our overall portfolio, but we don't want to be hugely positive leaning. We just want to take that down a notch as we hit the weekend and as we start to see these forces coming back that might dampen how far we can go. In terms of day trading, well, we really know that we're in a chopping market in the S&P 500 because we haven't had to change these lines basically all week. They've been the exact same. I haven't added any, I haven't adjusted any, I haven't removed any. We've been trading in that exact same range all week long. And today, it looks like we are going to open a little bit lower, but of course that doesn't mean that we will go lower. We've seen that the last few days. Right? So we opened higher over here, we headed lower. We opened higher over here, and we went higher. So today it looks like we're going to open a bit lower, and we're really going to want to see what direction we go intraday, with us being pretty much in the middle of this range unless some wild news comes out that we haven't expected. I really don't see us moving very directionally. This employment situation report, there wasn't a huge change in the report, so it'd be surprising to see traders move in a strong direction because of that. It might move in a strong direction within this range, but what I mean is breaking out of the either this top blue line or this bottom blue line. I'd be pretty surprised if that happened. So really what we want to see, especially in that first half hour of trading or 1 hour trading, that'll kind of give us a clue, sort of like after the first hour right here yesterday, we kind of got a clue that it was sort of upward biased. Even though we chopped around a lot, we did continue to move a little bit higher that day. And same with on Wednesday. After the first hour, it was clear there was a downward bias, and this day we did get a very strong downward movement. I'm not going to expect huge movement. So we got most of our movement early in the day, and then small continuation, sort of like on Wednesday, strong movement early in the day, but then just chop after that. So day trading is tough right now because we don't have a huge, you're not going to get these huge directional runs as long as we're in this sideways chopping market. That said, it can be difficult to swing trade anything also because over a multi-day period that we're not really moving in any direction. So at these times, a lot of traders get frustrated. They're doing their trades, they're not getting a lot of results, or they're getting very baby results compared to what they're used to. When a market is really trending and really going, it's a lot easier to make money. So here you can churn your money, but the commission rates and the fees might not be worth this little baby run that you get. So we want to just be patient. Wait for this market to give you opportunities for larger movements and larger ranges of money. So the ones that will make money are the people who are doing neutral trades in the options markets. We don't really have that ability in equity markets, but if you're in the options markets, I guess the only sort of neutral-ish position where you could still make money in the equity markets is off of dividends. If you had a stock that's just going nowhere, at least you're still collecting a dividend. But in terms of options, you have neutral strategies, you have credit spreads, debit spreads, those are usually directional, but you can turn them into income style trades. And then there are iron condors and other neutral strategies, a neutral butterfly you could do in order to capture this very sideways movement that we've been experiencing. So for example, if I put in a very short term, 1 week butterfly or 1 week iron condor or 2 week iron condor, I'd be pretty safe. I would be less safe if I put it right at this range. But if I went out to this sea green line or a little bit above, and then the gap fill right here, I could do 1, 2 weeks and maybe collect a little bit of premium, 5% for a week, or 10% for a week. That might be better than making nothing during this sideways chopping movement. But in terms of day trading, you're really just looking for those really short runs, and you have to evaluate whether those short runs are worth your commissions and worth your time and effort. However, if you are learning, then it's always worth your time and effort, but you may want to do it on paper money rather than real money if it's going to cost you in commissions. Okay, so that's it for today. We went through that a lot quicker than I thought we would, but let's get ready for the open. Just take a look at your portfolios, see if anything needs to be adjusted, if you need to hedge anything, if you need to take profits, or if you have anything that you've just been holding on because of this choppy market and you've been holding on and hasn't really done anything. It might be a good idea to just simply take that risk off the table before the weekend. All right, guys, have a wonderful day, and I will see you in the aftermarket session.